Hola amigos, welcome back ladies and gentlemen on this magical Monday for what is going to be nothing short of another jam-packed daily market update every single day. We are committed to keeping you guys up to date with the latest and greatest things happening within the crypto space, but also the broader markets, and that's exactly my intentions today. We're going to start things off with some interesting news from a Lisa Gordon, who is the chair at Cavendish Financial. And she is essentially proposing that the UK should consider taxing crypto more to boost stock and the economy. It should terrify all of us that over half of under 45-year-olds own crypto and no equities. Well, we're going to be showing you the performance of the UK's largest stock index, the FTSE, and perhaps, let's say, Bitcoin over a period of time. This is something that we don't want to see come to fruition. I'm sure she has her reasons for saying this. Of course, an exceptionally impressive financial career from Lisa. And she does have links to JP Morgan that have infamously been against perhaps Bitcoin. Jamie Dimon likened it to smoking and said he supports your right to do so, but he doesn't think you should. And we'll get into all that to sort of kick the video off. Then we have news from the IMF, the International Monetary Fund. Anybody that hasn't read The Diary of an Economic Hitman should. And the IMF says digitalization has created a new financial service product and a digital asset designed to be used as a means of payments or act as a store of value. This is huge news. Then we got some news from Binance Chain, BNB Chain, which I think is going to do very well. We'll give you our price prediction for that. And then we're going to look at CoinShares weekly report in regards to inflows, outflows, and just give you a general update on the markets. The markets are looking a little bit more perky today than they have been. And actually, I've done a very interesting exercise with my patrons now. I did it on Wednesday and Sunday. Do consider becoming a patron, guys. It really does help to be in a group of like-minded individuals that are all working towards capitalizing on the cryptocurrency space. But if you look at how pretty much every post-inauguration period has resulted in the stock market, typically the markets will lull or dip into sort of the back end of March, April, May, and then actually start to rise once a lot of that uncertainty has been resolved. And we've said we're far more of a fan of Trumponomics than I think most people are, and I actually think it's going to result in an economic boom. Certainly if they can do what I think they're going to do with oil, which was, I'm certainly short oil, crude oil, WTI crude oil. If they can get oil to where I've got technical targets for, I think that's going to see economic prosperity, along with a number of other things that's taking place. I think they might lower tariffs for everybody, even though they're imposing them. I think that's what Trump's essentially doing with reciprocal tariffs. He's saying, okay, you want to charge us 25%, we'll charge you 25%. That's going to open a conversation to, okay, well, maybe we should lower them because we're kind of hurting ourselves with taxing the US in the manner that we are. And actually, even further than that, perhaps, the wrong thing to do would be to start a trade war and continue to up tariffs, like what Canada initially sort of threatened to do. Bad idea, because the US, of course, is the largest economy in the world and one of the biggest consumers, or the biggest consumer, and one of the biggest exporters also. Let's dive into things, guys. Enough of my own economical, political projections. According to Cavendish Finance Chair Lisa Gordon, the UK should consider taxing crypto more to boost stocks and the economy. It should terrify all of us that over half of under 45s own crypto and no equities. And perhaps, but the vast majority of money is with people over 45. If you look at the statistics, UK Bank Chair warns crypto tax to curb terrifying obsession, revive London markets. Let's read into this, and then I'm going to show you how well the FTSE's done, how well the UK's largest index has done. You're probably talking about a 25% gain from the height of the .com rally. So from the 2000s to now, you're talking about a 25% gain. And we'll look at the crypto's equivalent. This is about keeping you guys poor, in my opinion. Cavendish Chair Lisa Gordon warns the UK's growing obsession with crypto poses economic risk. Shifting investments from equities to crypto could undermine long-term financial stability. With 9 million Britons holding crypto, Gordon advocates for better financial literacy and market reform. As cryptocurrencies gain traction in the UK, millions of Britons are pouring their savings into digital assets like Bitcoin and Ethereum. But while this surge reflects growing mainstream acceptance, some financial leaders warn that the country's fascination with crypto could have dangerous consequences. Very interesting, because the UK's agenda from a political point of view is very much a globalist one. Keir Starmer was asked, Davos or the WEF or Westminster. He said the WEF over Westminster, which kind of tells you what they're all about, yet they don't really want to be a part of this global sort of financial system that these cryptocurrencies are enabling, which is interesting. Lisa Gordon, chair of investment bank Cavendish, has raised concerns over what she describes as a terrifying obsession with cryptocurrencies, urging that the shift away from traditional equity investments threaten economic growth and long-term financial securities. And let's talk about the UK's stock market. It's not like the S&P, far from it, which has become a global kind of accepted index. And if you look at from the height of the dot-com crash or boom to where we are today, you're talking about a 24% gain in 25 years. So you're losing money to inflation. You'd almost have been better off with a savings account than putting money in the FTSE if you had got in here or here or here. It's a pretty shocking gain unless you were literally scooping up the very lows of the crashes. Then you might have done well, but retail typically doesn't do that. However, the FTSE I'm actually bullish on, because I do think this has broken out. It's back-tested it, and now you will see continuation and a broader trend. And I think with monetary easing, we may see that take place. But the UK stock market through the lens of the FTSE has actually been a shocking investment, pretty much compared to everything else. Certainly Bitcoin, and we'll use the BLX, which is the longest chart that we have for Bitcoin. If we go back to its inception, you're talking an insane return of thousands and thousands of percent. So I think that's pretty one-sided advice in regards to steering people away from crypto and into the traditional financial sector, certainly the traditional equity sector in the UK, that has just been such a horrific performer. That's not what we want. Please don't give any of us any more reasons to leave the UK than we already have. Go and walk around pretty much any major city in the UK right now today. You'll see the same thing, and it's quite frankly shocking. And I feel very sorry for people that perhaps don't have a choice. I have a choice, and I'm choosing to stay in the UK because I love this country. As tempted as I am to move, I do think we are going to see a massive swing back towards the opposite of what's currently taking place. I think there's dangers with that. But I think, there's going to be a kind of revolution here in the UK because, we're quite easygoing people. But at the same time, you push us too far and, something will happen as a result of that. But very interesting indeed. I would say, actually, we should be educating people in regards to cryptocurrency and embracing what is going to become a transformational technology instead of steering people away from it. Let's talk about some IMF news. So this is from Cointelegraph. The IMF says digitalization has created a new financial services product and digital assets designed to use as a means of payment or act as a store of value. This is from the IMF report. Digitalization has resulted in the appearance of a new financial services product and of new digital assets designed to be used as a means of payments and store of value. Means of payments refers to the instruments used to make the payments, such as a check, debit or credit card, or one of the wide varieties of electronically transferable digital financial instruments. The new digital financial services products fall into existing categories of products, and the new digital assets fall into existing asset categories. However, they should be reported as of which items or as part of product details in the thematic account on the digital economy and the associated digital supply and use table when they are important and can be separately identified. So we're seeing sort of a shift towards, and more broadly, a global acceptance of this industry as time goes on. The IMF have spoken about, Augustus Carlson has spoken about the kind of finternet, and that's what a lot of these technologies are going to enable. Little bit of BNB news. This is over Twitter right now. BNB chain overtakes Ethereum index volume. You are going to see, in my opinion, the loss of market position by Ethereum over time. And the reason being is there's other chains out there that are simply better, faster, and stronger. And once the chain world, the crypto world, is interoperable, the network effect is now broad spread. You don't just have to be on one chain to sort of capitalize on it. And actually, I do have a target on BNB. I'll go to my watch list. Where are we? BNB. And we've given our target. BNB is one of the stronger looking cryptocurrencies. It's ran into all-time highs. It's pulling back as you'd expect. We do believe this is an inverse head and shoulders. It's going to take you to $2,674 for Binance chain. So good news for any BNB holders. This is an inverted, hanging very heavy. You'll likely break this and do rather well. And I think the cryptocurrency space is on the cusp of seeing a real continuation, but we'll cover that more broadly in just a second. Let's talk about CoinShares Digital Asset Fund Flows Weekly Report. Renewed optimism in crypto markets as inflows break a 7-5-week outflow streak. And you can see this is it here. We've had a pretty brutal concession of outflows, but inflows are now starting to pull back. Digital asset investment products saw a reversal last week, breaking a 5-week streak of outflows, with inflows totaling 644 million. Bitcoin led the recovery, attracting 724 million inflows and ended a 5-week outflow streak that had totaled 5.4 billion. I believe there was over 40 billion. It's now 35-ish billion with these recent reports. And you can see actually that's highlighted here. Ethereum faced the heaviest outflows, with 86 million exiting the asset, while Solana recorded 6.4 million in inflows, and Polygon and Chainlink seeing more modest gains. Also in this, XRP also saw inflows, more actually than Solana, but it wasn't mentioned for some unknown reason. Digital asset investment products saw a reversal last week, breaking a 5-week streak of outflows, with inflows totaling 644 million. Total assets under management have risen by 6.3% from their low point on March the 10th. Notably, every day last week recorded inflows following a 17-day consecutive run of outflows, signaling, and I think this was back end of adjustment over Trump's tariffs, signaling a decisive shift in sentiment towards the asset class. The majority of flows originated from the US, of course, which saw 632 million in inflows. However, the positive sentiment was broad-based, with Switzerland, Germany, and Hong Kong also recording inflows of 15 million, 13 million, and 1 million respectively. Bitcoin led the recovery, attracting 724 million in inflows and ended a 5-week outflow streak that had totaled 4.5 billion. 5.4 billion. You can see the dyslexic can be literally just muddling things up. Meanwhile, short Bitcoin investment products saw a third consecutive week of outflows, totaling 7.1 million. Sentiment in the altcoin space was mixed. Ethereum faced the heaviest outflows with 86 million exiting the asset. Other altcoins with notable outflows included Sui, Polkadot, Tron, and Algorand, interestingly. On the other hand, Solana recorded 6.4 million in inflows, while Polygon and Chainlink saw more modest gains of 0.4 and 0.2 respectively. So good news. We're seeing a sort of sentiment shift. Let's talk about Bitcoin. And what I want to do, I did this with Patreons yesterday, just take the draws off that we have that give us technical reasons to be bullish. We've said this is just going to be a pullback in what is a broader uptrend, and that the bears are going to have their, they're going to be wrong again. They've been wrong on every single pullback so far, of which there's been many, and we've continued to keep you on the straight and narrow. I'll just show this. That's not the chart I want. You know, there's been consistent pullbacks, just like there has been for the S&P 500. This will recover. in my opinion. And retail sentiment was literally at March 2020 lows, 2008 lows, or lower than the dot-com crash lows. It's not warranted, and actually that's the very thing that's going to set this market up for continuation, in my opinion. When we put all the draws back on, we have every reason to be bullish. You're going to bounce here, I believe. You've filled that gap. This is the 30-weekly moving average that I like to use to look at sort of phase analysis. We are going to see continuation, I do believe. And the altcoin sector looks good, in my opinion. It looks really good, guys. Talking about the S&P, which we've just so correlated to, this could be the end of the S&P's pullback. Certainly, we've got higher technical targets for the S&P. You'd run into a big key level, which was our inverse head and shoulders target. This pullback is still in the realms of normalcy, and I think you're going to recover from this. And the bears are going to be wrong. Once again, the people calling for a debt collapse, it will happen potentially eventually, okay? But the same people have probably been calling for a debt collapse from when the US's debt went from 500 billion to 1 trillion, then from 1 trillion to 2 trillion, then from 2 trillion to 4, from 4 to 8, etc., etc. And now, there's been a reason for a debt collapse ever since. Now, okay, we're at inflated levels, but whilst the emperor believes he's got clothes on, you'll see continuation for markets broadly. And I don't believe a debt collapse is coming. In fact, I think they're going to do some interesting things with it, with stable coins and things like this, and kind of innovate the system, ironically, in regards to where this industry spawned out of. Ladies and gents, that's it from me. I'm going to love and leave you. Thanks for watching as always, and I'll see you on the flip side. See you soon.